Hey everybody, it's Jim Hiles from First Capital and Gold Plan 101. This is fairly timely, and it's probably a good thing you can do. You can do it anytime during the year, but the point being is we are looking at inflation rearing its ugly head, and we may actually benefit from this investment. It's called I-bond. When you go into an I-bond issued by the U.S. Treasury, actually go to the government website, type in I-bonds, usgov.com or something to that effect, and you'll get access to these. You got to go direct and buy them there. So you don't have to buy them through a brokerage account. We don't sell them here in any way or through any custodian. It's got to be done direct. Now, the issue here is that why would you do this? Inflation is really starting to creep up here a little bit, and that usually is not a good thing for fixed rate bonds. So these are adjustable rate bonds. They actually are regularly adjusted semi-annually to keep pace with rising inflation. So there are also some benefits in here from a tax standpoint in that they are federal bonds. U.S. Treasuries are not subject to state and local income taxes, so it helps a little bit. We are limited to $10,000 a year per person. You can actually go a little bit higher than that. If you've got a refund, you can apply to an I-bond for another $5,000. So it could be $15,000 a year per person. So a little bit of if you want to get out of this thing, it should be a longer term hold, but if you got savings money lying around doing nothing, this is, I think, a fantastic idea. And let me get to why. So I-bond currently are paying 7.12%. That's why. Now, it is a floating rate. So you're going to get what a Treasury is going to get. As we all know, Treasury rates on fixed rate Treasuries are low. But the I-bond actually moves with inflation. And twice a year, they're going to look at resetting this thing based on the current rate of inflation. So up until recently, this hasn't been all that great, but now the 7.12% rate of return that I can get in an I-bond is a lot better than I can get in anywhere else I can think of for the same amount of risk. Now it is adjustable, meaning if inflation comes back down and goes back to pre-COVID levels, for example, you'll be coming back down to 2-3% bonds, just like every other bond. But I think it's well worth the risk. It's safe. It's better than having your money, sit in the bank and doing absolutely nothing. So take advantage of these I-bonds. Go to US Gov and check it out. If you have any questions, please feel free to give me a call. But I think it's a great idea for lazy money, and you want to do something with it in inflationary times. Jim Hiles signing out for now.